Palantir's NYSE PLTR stock was up more than 14% pre-market after the company beat expectations with its first-ever quarterly profit. Adjusted earnings per share were 4 cents, a penny higher than the street consensus. Revenue totaled $509 million, exceeding expectations of $503.1 million. The company expects first quarter revenue of between $503M and $507M, which is less than the $520.3 million average estimate. New contract wins from the firm's efforts to expand its commercial business fueled these results, as quarterly commercial revenue increased 11% year-over-year to $215M. Nonetheless, Palantir stated that demand for this segment in the United States had slowed. Morgan Stanley reiterated its equal weight rating on PLTR as growth remains subdued despite improved GAAP profitability, and Goldman Sachs stated that while core commercial business momentum is strong, visibility into government acceleration remains limited. The Thyssenkrupp founders, due to poor results, Thyssenkrupp ETR TKAG shares fell more than 7% in Frankfurt recently, after first quarter adjusted EBIT fell by 1/3 year-on-year to €254 million. According to the company, this was primarily due to a sharp drop in metal prices, which impacted its material services division. Thyssenkrupp also stated that its full-year outlook will remain unchanged, implying that returns will be lower for the rest of the year. Despite beating earnings expectations, SolarEdge suffers a setback. SolarEdge, NASDAQ SEG, was down more than 5% in pre-market trading, despite the fact that its $2.86 EPS beat expectations of $1.54. Revenue of $890.7 million was also higher than anticipated. Investors may be disappointed that the company only kept its revenue growth forecast for 2023 at 20%, 30%. According to Goldman Sachs, the company's results were well above expectations, and Europe remains very healthy. The company expects revenue of $930 million, up or down $15 million in its first fiscal quarter, exceeding the consensus of $918.5 million. Coca-Cola leads the way. Coca-Cola NYSE KO reported 45 cents earnings per share in the fourth quarter, meeting analyst expectations and slightly higher than expected sales of $10.1 billion. Guidance exceeded expectations by a wide margin. It expects organic revenue growth of 7%, 8%, and comparable EPS growth of 4%, 5%, exceeding the average analyst estimate of 2.96% growth. In the pre-market, shares were slightly higher. Marriott scores a victory thanks to strong travel demand. Marriott, NASDAQ MAR, reported earnings of $1.96 per share in the fourth quarter, 13 cents higher than the average analyst estimate of $1.83. Revenue also outperformed expectations, coming in at $5.92 billion versus the $5.39 billion consensus. The positive results reflect the quarter's high travel demand. Pre-market, shares were slightly higher.